because I do 1,300 crunches and sit-ups 4 times a week.
What's a dose? Can you translate for us?
Winner of the gold medal and the champion golfer of the year is Ernie Els.
All right, everyone. Well, good evening. Welcome back to the Go Track, the podcast about golf and golf-adjacent stuff, mostly from Africa. I'm playing a 2-ball this evening. I'm joined by my esteemed colleague, JDV. JDV, where are you and what are you doing?
Terence, this is like Bear Grylls podcasting. I'm at Champagne Sports, away for the long weekend. I've been banished outside to do this podcast. My internet's so bad that I've had to borrow someone else's phone to set up a hotspot. There's no battery here. It's probably 5 degrees. There's snow on the mountains. If we could keep this reasonably short, otherwise I'm going to look like that meme of Jack Nicholson where he's like frozen at the end of The Shining.
That's so epic. I thought you were going to say you're calling in from Van Renen's Pass, from someone's car.
Yeah.
But
stuck in the car.
No, well, thanks. I appreciate the commitment, JDV, and I believe you got some golf in, but we won't do a deep dive on that. But I hope you had a good day out there. I'm sure it was playing firm and fast on those greens of Champagne Sports.
It wasn't
guys,
actually. The greens were reasonably slow. Bearing in mind it had come off 2 days of rain and sleet and the rest of it. So it was actually quite balmy out there. It was a nice day. Obviously Champagne looking a bit yellow, but I think give it a couple of days of sunshine after this rain, it's gonna pop again. But I love this course. Champagne Sports is such an epic golf course.
It's a great time of year there as well. JDV, we decided we wanted to do an episode on investing in golf. So we try and cover some a variety of topics on here and speak to interesting people. And for quite a while, I've had this topic in my mind around if you had like 10 or 20 or 50 grand as an example, and you wanted to put that into a golf investment. What are your options? What companies are out there? What type of businesses trade publicly and would actually take your investments? And then what are the different areas that you could look at investing in?
So Terence, just at the outset, does it count in investing if you've got 20 grand and you want to invest in like the pro shop to buy a set of clubs, or is that not
that
strictly
not count,
investing in the company? No. You're investing in your own game, though.
No, that's a liability expense that most likely that you're expending there. That's a sunken cost. You're unlikely to get a return on those 20 grand clubs. As much as Carl believes that you are going to, that's you're not going to get a good ROI necessarily. So I mean, think about it as if your old uncle or someone came to you and said that, they've got 50 grand and they really want to get into the golf industry, but they have no clue as to what they should do. The goal of this podcast is maybe to inform you guys a little bit more about, kind of what's out there. And while I was doing research for this podcast, I just dug up some super interesting facts around, whether people are aware about who owns all the different golf brands, and it's a whole rabbit hole that I went down. And I kind of I do have a bit of a passion for doing sort of company analysis and that, so it was quite an enjoyable task. But JDV, the golf industry is big. Over 60 million on-course golfers combined with another 20 million off-course golfers worldwide partake in the
what's
global
an off-course
golf market. Yeah, so good question. So an off-course golfer are people who don't actually consider themselves golfers, who wouldn't go ordinarily to play 9 or 18 holes, but they would partake in going to the driving range. They would play screen golf. They might play putt-putts.
So half, basically.
Things like it. Sorry? So half.
So it's basically half, yeah.
Exactly. Yeah. An off-course golfer. Exactly. Yeah. He would fall into the 20 million. Exactly. And Tucky by the sounds of it as well.
Yeah. Actually, more so Tucky looking at that handicap sheet.
Yeah. So anyway, we have around 80 million people who partake in this market, and they purchase equipment, apparel, technology, hospitality, and golf experiences, which creates an $80 billion industry worldwide. So you just let that number sink in. But what I'm going to focus on this evening is kind of three different areas where that I found where you could make investments. The first is sort of in equipment and apparel. So this is kind of perhaps the more obvious places that people would think of. Looking at the companies that produce the golf clubs, the golf balls, the caps, the shirts, the shoes. All right. Then we have some companies that have a little bit of a crossover where they do that, but they also are involved in like golf venues. So in the hospitality side of golf. So think about driving ranges. Think about we don't have a lot of it in South Africa, but a lot of these super high tech driving ranges where they have simulator setups and TrackMan and the whole bank shoes. It's a whole like golf experience.
So sorry, Terence. So the venue doesn't include like golf courses with membership. Are we talking like the Gary Player sort of hotel with golf courses? Does that count as a venue? Or are we talking like what's that one where we hit the driving range where you try and hit into the targets and that's sort of a venue?
Exactly. Yeah. So it's more of a Top Golf type venue. Just from the outset, interestingly enough, I did actually try and find whether or not there were publicly trading companies that operate almost like a real estate investment trust who own like portfolios of golf courses. Now, there are numerous companies that own like in the hundreds of golf courses in different parts of the world, particularly in the US, Japan, and Korea. But none of them actually trade publicly. So you would have to go and try and make like a private investment in one of those businesses, which would obviously be a very, very different kettle of fish. But those are all private companies, so it's quite difficult to find out too much information about them. Obviously, in South Africa, you could, if you wanted to get a little bit of exposure to the Sun golf courses, you could make an investment in Sogo Sun. But yeah, obviously golf is a tiny component of their turnover. So you're not really doing a deep dive into golf by making that investment. So sorry, then the third. Yeah.
Just to stop you there with the Sogo Sun, because we did touch on it when we did the top 100 golf courses, and we had said that it was interesting that all of, Sun City, Lost City, Wild Coast, all of those courses that are associated with casinos had dropped a bit. And I think we theorized that was probably because of the rise in platform online betting, that, the golf courses, which were trying to actually get people to the casino, which was the big money spinner, is not as much of a money spinner anymore. So as you're saying, the Sun group and the rest of it, the Sogo Sun group, it's the golf courses is ancillary to their main business. And, you can see now when their main business is shifting that the golf course, it doesn't need to bring people in anymore for them to make that business, to make the money. And I think we were onto something there as to why those golf courses were starting to drop in the rankings, because it just doesn't make sense to put the cash into the maintenance and revamps and alterations, etc., that it may have done 20, 30 years ago.
Yeah, look, I think the model there in certain cases still works for them in terms of there's still a huge quantity of like sort of high net worth individuals who want to play golf. So having a couple of golf courses at a resort that also has casinos, and that's that model still works. You golf during the day and you gamble at night. But yeah, perhaps they haven't. It hasn't been a focus for them. Of broadening their horizons in terms of growing that portfolio. I think they're kind of comfortable with the assets that they've got. JDV, I'm gonna quickly run through this because there's quite a bit of info to get through here, and we are going to try and make this a reasonably short podcast. So sorry, I touched on sort of the the equipment and apparel, the hospitality, the venues, and then there's tech. So there's companies who build a lot of the tech that sort of sits in the background of a lot of these places, which we'll get into. And then the fourth category, which I think you're going to be interested in, is actually players, actually investing in professional golfers, which is quite an interesting kind of little nugget that I found. I just want to actually, I'm pretty sure I'm going to forget to do this at the end, but a lot of info that I got, well, quite a bit of info that I got for this, and something that sort of, the reason that this topic piqued my interest was that I started subscribing about a year ago to a weekly newsletter called Perfect Putt. So if anyone out there is interested, just Google Perfect Putt. You can sign up for free to their weekly newsletter. I think it's run by a guy called Jared. He's based in the States. I did actually reach out to him on Twitter, asking him for his inputs for this podcast. He basically replied and said that he's unfortunately not in the business of giving financial advice. So I think he was just trying to cover himself. But super, super cool newsletter. It's only like a 5-minute read, and he writes all of his stuff like very, very succinctly, and gets his message across really well. So if anyone's interested in the business side of golf, I'd highly recommend subscribing to the Perfect Putt. And probably, Jacques, I probably need to cover myself somewhere at the beginning of this to say that this podcast does not constitute any sort of financial advice. And this is merely just for information purposes only. I have no idea how to do that, but hopefully that little disclaimer does it. What do you think?
Yeah, I think that'll tick the box.
Okay. I'm pretty sure guys are not coming to the Go Track for financial advice. I would really hope not.
Or if they are putting their hard-earned 50 grand on Anabon Lahiri or someone after this podcast, we can't help you, or I'm pretty sure we're going to win a case against you anyway. So don't try and sue us. Yeah.
Look, gambling's a different story. Gambling that's a different story. But the companies that I'm going to list here, certainly not telling you to necessarily go invest in them. But here we go. Okay, let's start off with the equipment and apparel companies. So there's two really major equipment and apparel companies which have a pure golf play, a pure golf focus. Okay, so the first company is Acushnet. Acushnet own the brands Titleist, FootJoy, Scotty Cameron, Pinnacle being the golf balls. They have a turnover of around 2.4 billion. Annual turnover around 2.4 billion. All these numbers are in US dollars, guys. And their margin, their EBITDA margin is around 15%. That's their sort of profit margin. Biggest contributors to their turnover is golf balls for Acushnet. So it's 32% of their turnover, which is around $750 million a year on golf balls. Golf clubs comes in just under that, around 28%. And then FootJoy, like shoes, are also a big spinner for them. That's like around 25%. Mostly focused in the US, about just under 60% of their business in the US, and then followed by sort of Europe, Korea, Japan, etc. Out of interest, JDV, I worked out, based on the number of golf balls that they sell and the number of golfers that are in the world, if you work out the average price of a Titleist golf ball is around $4.50 a ball, which actually ties in with what you pay here in South Africa. Roughly.
80 bucks. Yeah, $80.
$80 for 3.
No, for 1.
Sorry, yeah, for 1. Sorry, my maths is off. Yeah, exactly. So around $4. Yeah.
Yeah, carry on. So what's the
if you work
calculation?
that out, if you work that out, that's 165 million balls that Titleist sell every single year. That is, and they own around 60% of the global market share in golf balls, which is pretty damn amazing. So if you divide that by the number of golfers that play golf just across the world, they sell almost 3 new Titleist golf balls to every single registered golfer in the world every year. Obviously, that's just a stupid stat, but and a lot of people, don't play Titleist or they don't buy new golf balls. But that just shows you the size of like how many balls they're selling. It's crazy.
Or I think a lot of them get gifted to people at Christmas. Christmas golf balls that you get once a year. That's where your 3 golf balls stats is coming.
Yeah, 100%. But it's just a mad stats because like the thing and golf balls, like for me, JDV, I think there's a whole episode we could do on like just golf balls, because just think about how these balls are. You've got the same volume of balls going into the market every single year. So like the big question is obviously like, okay, what happens to all those balls? It's not like you're getting you're getting like double the number of golfers every year, you know. So obviously the balls are, you know, getting lost or whatever. And then there's a whole like secondhand golf ball market and whatever. But like, it's a lot of bloody golf balls, you know. It's mad. So yeah, if you wonder why Titleist are pushing back against the rollback of the golf ball,
probably a lot of bad golfers. That's why there's so many golf balls.
These numbers here, yeah. In terms of the share price, the stock price of Acushnet, over the last 12 months, it's up about 17%. And over the last 5 years, their price is up about 140%. They seem to be very focused, very good performer on the market. And they've kind of stuck to their knitting in terms of like what they know, which when I get to the next company, we can see how that's, in my view, that's like an important thing to do. Interestingly enough, 51% of Acushnet, so the majority shares of Acushnet are owned by a Korean corporation. And Korea comes up a lot in the business of golf, and you'll see it'll come up a little bit later as well. But it's just something to note that the majority owned by a Korean corporation. The next business is Topgolf Callaway JDV. That's literally the name of the company. It was a merger that was done between Topgolf and Callaway in 2021. They own the brands Topgolf, which is Topgolf basically driving ranges, which are the places where you go and hit balls, and they have booths with TrackMan and TV, and there's a whole like entertainment side of it. And they've got this awesome tech that like tracks the golf ball and then lights up like where your ball lands, and it's almost like playing, I don't know, it's like playing pinball. Looks like a pinball machine at night. It's like a massive pinball machine, their driving ranges. Obviously Callaway, and then
are there any Topgolf in South Africa?
No. Nope.
Not yet.
Yeah. Travis Matthew is an apparel brand, and then Top Tracer is the tech which Topgolf operates. It's basically the tracking tech. And then they also own Odyssey, the putters, OGO, which is a apparel and golf bag brand, and then WGT, which is that like that app that you can play golf. I don't know if you've ever played it on like the iPhone. It's actually quite a big deal. They have like a huge number of users on this app. It's a game. It's a mobile game. Their turnover is around 4.5 billion, so it's quite a bit more than Acushnet. But their profit last year, they only made like $30 million profit at a margin of like 3%. And before the merger of Topgolf and Callaway, they were running at like around a 16% margin, around $350 million in profit. So basically, the story of this is that this merger that has happened between these two businesses has been like a complete like failure, and I kind of get into why. But basic breakdown: besides Topgolf, which is like 40% of the income, their golf clubs are 25%, which is similar to Titleist. But then golf balls is only like 8%. It's like much lower. And then their apparel and all that stuff is like 25%. So the idea was in 2021 they merged. These two companies merged, and the idea was that Callaway wanted to like convert people who were using the Topgolf facilities into becoming like Callaway equipment owners, playing with Callaway golf balls or whatever. And basically, like the merger just has been a disaster. And as this classic like business 101, where a company has got some like either excess cash, or they've hired some consultants who've kind of convinced them that it would be a good idea to like try and vertically integrate their whole business. So they need to own the whole golf space, you know, ranges and equipment, and they need to try and do everything. And normally what happens is that companies really battle to do that effectively, because the one business is like so different to the other business. So with like Acushnet, they've been very focused on like what they know with like apparel and equipment and golf balls, and that's kind of it. Now you've got basically a company that owns a whole lot of these, that's like very asset heavy, i.e. Topgolf, very operationally intense, like, and it's basically a hospitality business. And now you're merging it with a company which is essentially like a manufacturer of equipment and balls and gear and that. So my sort of analogy would almost be like a South African breweries buying Tsogo Sun, just so that they could like market SAB only products into like Tsogo Sun hotels and casinos and whatever. But now suddenly they've got to like they've got to kind of like operate these. They not only are they a manufacturer of alcohol, but now they've got to operate these like hotel businesses as well. It's just a recipe for disaster.
So Terence, just so I get my head around this a little bit better, because so the issue that you're saying, and again, because I mean that also sounds like a great idea. I mean, if SA Breweries owned all the casinos and be like, right, now we're going to capture this market as well. But the issue is that you're stepping away from what your knitting is. So I know that with Callaway, for instance, they have like specific golf clubs that are almost easier to hit at the top golf facilities. And I think I watched a Rick Shields video or something where he was hitting the Top Golf driver or something. And he was like, this is actually amazing. And I can see that working, if you give it enough time to just say, we're going to bring people into golf that haven't actually been here. We're going to let them play very different, easier sort of clubs to hit, maybe even non-conforming. And then you do sort of bridge that gap a bit. So is it not just a case of, well, give it a bit of time and it'll come right, or has it had the time and it hasn't come right?
So I think there's two sides of it. I think the one is you're 100% correct. I think that was like the kind of working thesis, but apparently what's happened is that. And initially the thought was that, well, okay, at these Topgolfs, you'll then have like a full-on like Callaway like retail store, which will be like kind of Callaway only focused on selling clubs and that. And they never actually rolled that out. And apparently one of the reasons that they didn't, or the theory is that they got put under, once this merger was announced, they got put under a huge amount of pressure from the existing retail channels, so the guys that they would like wholesale clubs and balls and that to say, look, they didn't want to basically be competing directly with these Topgolf venues. So those retailers, I think, had those were the primary channels for selling Callaway clubs, and they had quite a bit of power over that process. So apparently they sort of put quite a bit of pressure on them to not go that route. And that's kind of one of the main reasons why it hasn't really translated into, if anything, it's actually diluted the sales of Callaway clubs, and that they've actually lost a little bit of market share during this process. So there's that side of it, and then there's the side of...
So it's almost like a bit of sabotage.
Exactly. Yeah. It actually works out well for their competitors. So that side of it, there wasn't a huge amount of information around it, but the working theory is that the retailers were not happy with kind of them being their sales kind of being cannibalized by these people then basically rather just going directly to like Topgolf and that. So the story is that they were put under quite a bit of pressure. And then just JDV, just operating, like the financials of like a business like that now, where you've got this one side of the company which the only way they can like if you're a manufacturer of golf clubs like Acushnet, for example, that if they want to grow revenue, they'll probably there's kind of two different ways. Obviously, there's three different ways, like just increased marketing, which would include doing new products, new product launches, etc. Or doing price increases. And obviously that is something that they're good at, and they can easily kind of scale that out with their existing kind of infrastructure. That's their game. That's what they do. Every 2 years they release new products, and they convince people to get the new set of irons and drivers and etc. If you want to grow the revenue of like a Topgolf, you either have to open new venues, which is hugely expensive, or you have to, and increase the prices at those venues. So what they saw when Topgolf was on this like massive boom was sort of just after the COVID period, when they had this like bounce of people who were sort of interested in golf, and Topgolf saw this massive growth, and they sort of based a lot of their scale out of the Topgolf venues on that kind of COVID bounce. And it started plateauing quite a bit in terms of like number of users at venues and that. So then they kind of counter it by like opening more venues, which you take on more debts for opening more venues, and like suddenly Topgolf Callaway's debts has gone like kind of through the roof, in terms of their financial liabilities. So interestingly enough, I mean, you could do a whole podcast on Topgolf and Callaway, I think. But interestingly enough, recently, just to give you an idea, the stock has been down 60% from literally the day that the merger was announced in 2021. The stock was actually a pretty well performing stock before that. So the stock market did not like this idea of a merger. They didn't believe it was going to work. And interestingly, literally a couple of weeks ago, it was announced that it seems almost certain that the two entities are actually going to split up again. So Topgolf is going to hive off into a separate hospitality-only entity, which will also be public, from what I understand. And Callaway is going to sort of go back almost to a similar setup, a bit like Acushnet. So the summary of this, JDV, is that this is just like a lawyer and consultant's dream. That they're just earning fees on all of these restructures and structuring, and so your brethren over there will be happy.
But Terence, isn't this also like a bit of a cautionary tale about a lot of what's happened in COVID, where, be it an online school or, WeWork or something like that, where you've had this almost artificial bump in performance and being like, right, this is the new future, and, we're going to go all in on this model, only for, a 2-year cycle to happen, and everyone sort of reverted back to what 2019 was. And it seems like a trap that quite a lot of companies have got stuck in, to say, what was true for COVID, it will be true for the next decade, which hasn't been the case. And it seems like golf hasn't clearly been spared from that as well.
I think that's pretty accurate. Look, golf obviously has seen, there has been some sustainability in the number of people who sort of have taken up golf. It's not like all of them took it up and then kind of left. So there has been positivity around the game. But yeah, I think this idea that everyone, like, you're going to be converting like tens of millions of people to through Topgolf, and then converting those people. So firstly, you got to get people just to go to Topgolf, and then the idea was, the working thesis is that you're then converting those people to become like on course golfers, because that's sort of the holy grail for like a golf brand is, if you can convert someone to an on-course golfer, then the lifetime value of that customer is like quite extensive. People are reasonably brand loyal in the golf industry, so that's where it just hasn't translated. Their kind of play on getting all these conversions to on-course golfers for Callaway just hasn't worked out. But yeah, so anyway, they're going to be splitting up. So look, Callaway itself was performing really well before the merger. You could compare them to Acushnet in terms of their performance. So perhaps once they split out and they become a bit leaner and a bit more focused, it may be it may be worth looking at, because they do still have quite a strong brand in terms of particularly their clubs. But here's a very interesting thing that was recently announced as well, JDV. The company just announced a partnership. This is a couple of weeks ago. 3-year deal with Golf Saudi. This is Topgolf Callaway. So
which golfers are Callaway players? Because that's going to be the mark on the sand.
So there's two things here. My two takeaways here. One, don't be surprised if all the live guys are suddenly Callaway ambassadors. And secondly, I would not be surprised if, with the split out of Topgolf, that the new shareholder of Topgolf is like 70% the PIC.
PIF.
Not the PIC. What are they called? The PIF, sorry. Public Investment Fund, yeah. MBS. So there's an interesting wrinkle there, that the Saudis are they're getting their fingers into the industry completely. So super interesting. I'm going to keep going, JDV, because we're going to work through this stuff. Just out of interest, the other golf brands, TaylorMade Golf brand is privately owned by a Korean private equity firm. They've had a very interesting past. They were started by like an American guy. They were actually bought by Salomon, the what you can call the French apparel brand. I think most people are familiar with Salomon. Salomon was bought then by Adidas in the 90s. Actually in 1997, which is interesting because that's what we would consider the birth of Tiger, the Tiger year. So effectively, Adidas owned TaylorMade for like 20 years. But again, it was like maybe a 10 to 15% part of their kind of business. And it was then sold on about 5 or 6 years ago to this Korean private equity firm. Mizuno, you can buy shares in Mizuno. So Mizuno are listed in Japan. Mizuno, besides golf clubs, they're big into football and baseball. So a lot of footwear and apparel is made by Mizuno. Golf is only around 15% of their turnover. But it looks like, I just had a brief look at their financials and their sort of track record. It looks like a really, really solid business. They operate on like around about a 10% return on equity, which they've done for like the last 8 years or something. Low levels of debt. They look like they run like quite a tight ship there at Mizuno. But it's a reasonably small. It's not a very big golf play. You got to understand that only around 15% of what they do is sort of golf kind of related.
So
and then
Terence,
the last one
before
is,
you go on, I'm a big Mizuno guy. I mean, I've got Mizuno bag clubs. I occasionally play with their balls, but I just want to know, the only Mizuno branded player I can think of offhand is Luke Donald. Someone was asking me who else plays Mizuno. I don't know. Hoff's normally the brand Oaks, but do you know other players that they sponsor?
Hoff's our like brand ambassador guy. Is Hideki Matsuyama not sponsored by them? Or is that just being like too obvious?
No, he's Strixon.
Oh, is he Strixon? Okay. I could probably look it up for you here.
No, don't stress. We'll figure it out. We'll get Hoff to come out with it later.
Yeah, Keith Mitchell. That's what it says. Luke Donald. So some journeyman in there. If you're interested, I actually do remember. Yeah, I mean, look, Hoff would have that stuff at the tip of his tongue, but yeah. And then the only other golf company is Cobra is owned by Puma. And again, it's a fairly small part of Puma's overall business. Obviously, Puma themselves have a golf sort of apparel section. They don't do clubs or anything like that. But that's another one. But yeah, so you can look at that. JDV, I'm going to go into the hospitality kind of venues.
Hang on. You got to address Nike, or have you done Nike? Did I miss that one?
I haven't done Nike. Look, again, Nike, the golf components of Nike is really, really small relative to the rest of the sales they make. So yeah, I was trying to focus on companies that were sort of pure play, sort of golf industry focused. Honestly, I didn't actually go and look at what Nike's sort of golf exposure is, but I can't imagine it's more than 10%.
No, I was going to say it'll be small.
Okay, so hospitality venues. There's three businesses which I'm gonna direct people towards. The first one is Topgolf. Okay, so if there is this spin-off of these two entities, and you think that these, it may be worth letting the dust settle a little bit with this merger and whatever, but yeah, if that entity remains listed and you believe that this format is something that's going to keep growing, and that's I would imagine that you could look at making an investment in Topgolf. That I'm sure they'll remain publicly traded. There's another business in the UK.
Do you think Topgolf would work in South Africa?
Yeah, absolutely. Yeah, I mean, after a safe place to go in the evening. I'm surprised. Look, we have similar-ish, like the guys now that have installed the TrackMan kind of, which are like sort of adjacent to Topgolf, where you can play all those games and that sort of stuff. Topgolf itself has a big focus on like the whole experience, so it's the hospitality. It's like going to a bar, like a nightclub. I'm sure you've seen the videos, and they have quite a lot of tech as well in that whole system. I don't think that they'll look at opening one doesn't seem like Africa's certainly not on their radar. But yeah, there might be cause for someone to look at like a local model of it. I can't see why it wouldn't work. So there's a similar company called Drive Shack, which has been around in the US for quite a long time, and they were also they were listed on the New York Stock Exchange. They delisted recently, but you can actually trade in their stocks through a different form called over the counter, which is I started getting into a big deep hole on trading stocks in the States, but essentially you can still buy shares in them. They have a very similar offering, but they seem to have a lot of the same problems, like high debt, a lot of assets. So like trying to repurpose some of the assets, like their poor performing ranges, like trying to, obviously they've got to try and offload them. It's not so easy to do that, as you know, like trying to sell off like kind of maybe land that hasn't been developed, difficult to grow. So yeah, you can look at Drive Shack as well. Those are kind of the two players in that market. And then the third one, JDV, which I'm almost certain is a pyramid scheme that I found, is this company called Golf Suites, which is its play is on the screen, purely on the screen golf market. So they do the sort of very high end screen golf bars and that, or it's like setups at like country clubs and that. And then they also do like a mid-level, more of like a regular bar, like a bit like the one you and I went to in Joburg. They do a whole franchise system of these. But the reason that it looks like a pyramid scheme to me is that they have like this very low entry points on their website that they keep offering you like deals to like invest in their business. And you can get referred, as soon as I start seeing like get referred by this other person to like become a member, like, and an investor. And there's a lot of flash. There's a lot of like orange pop-ups when you go onto their website, a lot of like invest now and like the biggest industry in the world. And so go check out Golf Suites, guys.
At your own peril.
At your own peril. You're more than happy to. Like, look, these places are definitely growing in popularity massively. The screen golf play, and there's no doubt that's like there are already a lot of successful companies. There's another business called 5-Iron Golf in the US, which has quite a big market share. They're privately owned, but the model is there, and we're seeing it growing a little bit in South Africa now as well.
Terence, the one thing that I thought, and maybe you're still going to touch on it, is private ownership of new golf courses. So it's guys almost crowdfunding like a new golf course to say, look, pay it up front and you'll get like a lifetime membership or whatever the case is. But you're essentially going to be bankrolling the development of the golf club. So I know it happened in the US. I don't know where I listened to it, but the guys were saying that, this might also be a pyramid scheme because they looked at the sort of initial contract and it was a lot of very vague terms in there. But that's it's also quite a different way to invest, to be like saying, okay, if you were legitimately going to say, you've talked about opening a golf course like a Mashi or whatever, like a really mint executive course or a Mashi on the North Coast, and saying, okay, guys, like I want to go out there and call for investors, do like a GoFundMe page or whatever the case is. But if you absolutely legit and to say, okay, well, this is what your investment's going to get you. It's going to get you X% of shares, but it's also going to give you like this sort of membership bracket, and it's going to be a private club. I mean, is that something that's out of the ordinary, or is that a bit of a normal sort of investment that people do in golf?
Look, I know that Zach Blair, the professional PGA player, he's recently built that golf course called the Tree Farm, and that was exactly like the model that he followed. He set up almost like a founding members structure, where he said, "Look, guys, we're going to have 25 founding members, and it's going to cost you $50,000 each or whatever." And essentially, that kind of gets the ball rolling in terms of getting the project off the ground. Jacques, in my opinion, in my view, from what I understand about owning a golf course, it's like a completely sunken cost, and it's generally like a bit of a vanity project, or a passion project, put it that way. Golf courses are not known for making a lot of money. Like they are known for like sinking like balance sheets. There are exceptions to this, and this is where I stumbled upon two companies in the US which own like several hundred golf courses, but it looks like they obviously they run them almost like little franchises, and they obviously operate on a very, very like tight margin model, because they've got a huge volume of these things, so they're playing like a bit of a volume game with these courses. So yeah, look, I think that model definitely does exist, and would be the way maybe if you were starting a completely new course locally. It's not something that happens here much. Most courses are built around essentially the real estate investments that are like kind of tied to them. Which maybe you could consider being like, maybe you are the founding member when you buy a plot of land at like Zimbali Lakes. You consider yourself a founding member. Maybe your name will go up on the board somewhere. JDV, so those are kind of the venues. You've got these driving ranges, golf suites, and then, as I said, I really was hoping to find like a real estate, like a company that you could maybe invest in if you were interested in having a share in a business that owned like 500 golf courses. Couldn't find a publicly traded one. And then technology. So I just want to go through these two companies quickly that I found. There's a lot of businesses that are involved in the tech side of golf, and by tech side of golf, I mean things like predominantly the tracking systems that are used in golf simulators, and then also like some of the optic systems, so like the range finders, and there's businesses that that like Bushnell and that you can, those are publicly traded. So there is a business in the US called Vista Outdoor. This is a stock that you can buy shares in. Their main focus is on kind of the outdoor side of the US. So it's not a pure golf play. They have a big focus on hunting, golf, and then just general like outdoors apparel. So if you kind of like that sort of combo, then it might be worth looking at this business. They have quite a number of really, really like solid brands, like brands that you would be familiar with, such as Bushnell. Foresight is their golf tracking device, which it's quite a well-known golf tracking device. And then they have a whole bunch of like hunting brands, which I'm sure like your hunting mates would probably recognize. I think around a quarter of their revenue is directly golf related. So it's not tiny, but it's not it's not like the majority of their revenue. Looks like the business is doing reasonably well. Looks like it's pretty well run. But yeah, you can check that out, Vista Outdoor. And then Golf Zon. This is the second company. So this is Golf and then ZON, Golf Zon. This is a super interesting company. I mentioned South Korea earlier, JDV. So Golf Zon, founded in 2000 in South Korea, and I'm just going to read this out to you, is the leading provider of golf simulators known for creating indoor golfing experiences. The company sells their simulators to individual users, golf academies, and commercial venues worldwide, but also operates physical locations, interestingly enough, only in South Korea, called Golf Zon Zones. It's a bit of a mouthful. But essentially, these are the simulator type club / bars that we would think of here. But screen golf in South Korea is like, I mean, there's another whole podcast there talking about screen golf in South Korea, but it is massive. So there's more people that play screen golf than play on-course golf in South Korea. South Korea is one of the biggest global golf markets behind the US and Japan. And they run like professional screen golf leagues, which are GolfZone is like the primary sponsor of these leagues, which people literally watch like on TV. They watch screen golf on TV in South Korea. So these guys are the big players.
I think, Terence, for me, you can understand it, especially in South Korea. Space is an issue. I know the price of playing actual golf is a massive issue. I mean, I know it's super expensive.
It's crazy expensive.
So, and the other thing is, I still think that there's a market for, or maybe, I talk squash, and like Squash League is going down because it's a long-term sort of 6-month commitment or whatever, but it's still something that you can do, a couple of nights a week. It doesn't matter what the weather is. It's epic. But the other point I was going to make about what you said is that a lot of what you've mentioned, golf is a lot of the time ancillary to the technology or to the brand that's being marketed. So it's quite an interesting one to say, okay, well, this is the technology or this is the brand, and oh, by the way, golf's an add-on for it. We can also apply it to golf, or we can also make these clothes which work for golf, or these shoes which work for golf, or put the technology in a rangefinder. So I don't know if that's correct to say, like, golf is ancillary to a lot of these companies rather than being investing in golf itself.
I don't think so. GolfZone, like this particular company is a pure like golf play. I did read about some other like one or two other sports that use some of their technology, but because of and it would be, this is where I think it would be really interesting to like get underneath what has created this massive popularity in golf in places like Japan and South Korea, because legitimately, like, you can't understand how like crazy those people are about golf. Like it's mad. I mean, you would love it there. You would fit right in. You would stick out, but you would fit right in. It's crazy. I mean, when I worked on that golf course in Canada, like, we used to have these buses of these Japanese and Korean tourists who would come over, and I mean, like you would have a busload of like just ladies, like 80 ladies would arrive at our golf course from like Japan just to like come play golf, and they would cruise around. They'd be playing like 10 courses. So yeah, they're absolutely mad about golf, and it's in Korea in particular, because as you highlighted, the cost of playing on-course golf is super expensive, and they've got a bit of a space issue. Japan, interestingly enough, has the second most golf courses outside of the USA, like for a country, which I didn't know either. It's got like 3,200 golf courses, which is mad. But yeah, this GolfZone are sort of, they've got this really solid base in Korea. I had like a look at their, like, as much as I could unravel their sort of financials based on converting like Korean yen to dollars, and yeah, there was a bit of confusion there on my side, but essentially around about 500,000, 520 million rand turnover, and they sort of have been growing. This was the most impressive part of them. For the last 5 years, their compounded annual growth rates in their share price, in their earnings, has been 30% a year, compounded annual growth rate. So looks like a really well-run business. And recently they just announced that they did a deal with, do you remember David Ledbetter, the coach? Yeah. So evidently he set up a really, really good business, like beneath his golf coaching business, like almost like a franchise of his brand, the Ledbetter brand. And this was built into a lot of golf academies and stuff around the US. And this company, GolfZone, I don't know how recent it was, but they purchased this Ledbetter Academy system or whatever. And so now all of their systems are like basically infiltrating into these academies across the US, and they've combined the tech. So it's not only not only is it like a pure tracking system, but they have all these programs around. I don't know if you've seen those things where they attach the little probes to the oaks bodies, and they show you like, exactly what your body's doing while you're hitting the golf ball, and like all those different metrics that like plug into like teaching people how to, the golf swing. They're like deeply involved in all of the tech, like kind of behind that. So they seem like pretty well entrenched in that space. And I'd imagine there's probably not that much competition when you're getting down to those like kind of fundamentals. So I reckon they've got some good moats around their revenue. And I was pretty impressed by this business, GolfZone. So yeah, something to check out. JDV, we are almost there. We're on the final straight, and I left the best for last because this is where I think you're going to be the most interested.
This is always what we do wrong, Terence, is we leave the best for last. You just need to edit this next section into the beginning because
we're going to make
this is where we're about to say, would you buy shares in Bryson?
We're going to make a highlight reel, and I promise I'll include this in the highlight reel. But anyway, through the Perfect Putts newsletter, I discovered this business called Carry Golf. So literally the word carry your bag, Carry Golf. So go check it out. Essentially, Carry Golf, and I'm gonna read this, is a sports fan engagement platform designed to help early stage professional golfers secure funding from fans and investors. So basically, you're a young golfer, loads of talents. You don't have a rich family or uncles or friends, and you basically put yourself out there to say, guys, I need to be sponsored for the next couple of years so that I can get on my feet. Because the cost of getting just making it on these tours is pretty astronomical. The guys talk about around about $300,000 to $400,000 a year of just basically those are like almost like your running costs, of travel, attending, trying to play into Q schools, trying to make it into events. That's kind of like an average fee just to get your feet underneath you. So what these guys do is they provide golf talents with financial support they need to advance their careers. In return, investors can gain exclusive experiences like in-person golf events, plus a potential share of the golfer's future earnings if they succeed on major tours. So it's quite a clever model in that what they've done is you can essentially buy shares in a particular player, and the minimum amounts are very achievable. Like you can buy like, I don't know, I think it's like $500 or $1,000 maybe. I think it was $500. And what happens is you then get a return if the player, for any winnings that player earns in an event where the purse is bigger than $1.5 million. You then, as an investor, can get a return, and the returns, it depends on how much was put up in the beginning, but they are roughly 15% is what the investors get a return on, and that is for 4 years. So from the time of investment, the way they've set it up currently is that investors can get those returns from that golfer for 4 years. So I don't know a hell of a lot about like horse racing and owning horses and that, but this is as close to that as I can kind of picture JDV. Essentially, you've got all these kind of running costs and that of this thing, and you're just hoping to like pick one that's going to like make it through the fog, and really hit it big, and maybe you spread your bets a bit. But it's a very interesting investment, and I think it's very cool because imagine how like invested you would become like emotionally in like the success of these people, a bit like guys do with buying in horses, I guess. What are your thoughts on this sort of investment?
Terence, some bad thoughts. Firstly, a 15% return on investment for like some latte who like is going to sweat over a 4-foot putt. Like I'd much rather put it into, and only on the like 4 years for a 1.5 million. I'm sure there's more T's and C's to that, but I'd rather put it into like an Ellen Gray or something and get like a 12% return over that period, like guaranteed almost. So yeah, that's the first sort of red flag. The second thing,
just
is
to deal with that. Just to deal with that, though, I think that's why they've got this this dual like rewards thing, where basically you basically get this right to have all these like experiential experiences. Now, like I don't know exactly what those are, but I'm assuming you would be able to like go play with that golfer in like whatever pro-ams or stuff like that they host and that. So there's a little bit of like, I guess, a vanity side to maybe making that investments. But yeah, look, I hear you on the return.
Can you just imagine playing with your girlfriend being like, hey, listen here, you little shit, like I've put $500 into you, like I'm getting a 15% return, best you make
but remember, JDV, it's not 15% on what you invested, it's 15% of what they win.
Oh, is it 15% of the winnings?
Yes.
That changes the game. Okay.
So you're taking a gamble.
Like, no, of course, no, ever.
Oh shit! No, yeah, it's on what they win. So, like you know, the sky's the limit here. Like if you hit an absolute junior who just like somehow cracks it through, you basically have access to 15% of their earnings for 4 years. I mean, there's a massive upside there.
Okay, so do you
potentially?
So okay, a couple of things. Yeah. So the first thing is, do you get to pick the junior that you're investing in, or are the guys like, oh, by the way, this is the junior you invested in. Yeah, he's now like a car guard.
No, you pick them. So what they do is they put like a portfolio together. They started off. So these two guys started off doing it. It was like basically they set up these like crowdfunding things. And they were like, I'm sure we can help like these golfers that they knew, like raise money. Like, and people, they were so oversubscribed so quickly that they realized that there was like something to this, that people were interested in, like, because people are like passionate about sports, you know, like we are about golf and that, you know, like people were interested in like, in like, I mean, there's something to it as well, right? It's a bit like people who would tell you that they own like half a horse, you know, like,
but also there's big prize money available with.
But also, JDV, you know someone owns half a horse because they tell you they own half a horse, and they tell you like 10 times that they like own, and they've got a picture of the horse up in their bar and whatever. So I would imagine there's a similar psychology around like, oh, I actually have shares in this golfer who's on TV right now, you know. It's
okay. So the next one was, isn't this what Tony Finau is in like massive legal battles over? Was that someone essentially bought a share in him and sponsored him, and like now he's not paying, or allegedly not paying what he should over to that investor, and like it was a horrible deal when he entered into it, and you know it's like just gone pear-shaped. So what are the mechanisms in place to ensure that the payments that go directly to these players, you know, go then like finally find their way to the investors?
I think that Tony Finau, look, I'm not going to sit here and be a salesman for this particular company, but I think that I would imagine that Tony Finau case is a good example of why these guys feel that they actually have a competitive advantage, why they want to attract athletes, because I think because there's a lot of those private things that happen all the time, right? I mean, I'm sure, like, if you chat to the South African golfers, I'm sure we would unpack probably more than half of them have been sponsored by like Johan Rupert, and you know, like there's.
I was about to say Johan Rupert, definitely.
Yeah, but no, I think that that's legitimately the case, and I know like Ernie has put his own bucks behind guys and stuff like that, but you never get to see the T's and C's of those deals and that, right? And maybe with Johan Rupert, maybe some of it's just like philanthropic or whatever, but I think a lot of guys probably get roped into like really shady deals, like, and maybe Tony Finau is an example. And I think what these guys are doing is trying to make it a bit more like above board, you know, make it a bit more like sort of democratize a little bit and say, look, we have a bit of a trusted system here, and it seems like they've got more of the athletes to kind of buy into that idea as well. So almost turning it into a bit more of like an above board kind of fund instead of like a shady deal on like an Oaks driveway, you know, like you can imagine some of these athletes when they like
an underpass.
they're like a really good high school golfer or something, and then like some super rich oak in their like tiny town that they live in like phones them up and says, come over to my house for dinner. And basically the oak's like, yeah, I'm going to sponsor you and just like sign over here. Like don't stress about what it says. Like it's all good, you know. We're going to support you the whole way, you know. And then like 2 years later, and the oak's like winning his first PGA check, they phone him and they're like, yeah, you got to pay us like the 95% that you promised us, you know, on the contract sort of thing. I mean, I can imagine there's like must be horror stories of deals that guys have signed, because look, guys are desperate to live out their dreams, you know. So I like this. I just, of all the investments that I kind of looked into JDV, and look, a lot of the stuff is sort of boring stocks and shares, right? Even though I enjoy looking at companies, and particularly when it's golf related, it's interesting to see how much like Titleist, like how much bloody golf balls they sell. It just blows my mind, you know. $750 million a year worth of balls. But this type of investment is really cool, and it's like, this is the sort of thing where you could like, yeah, and I'd be interested to know if like, you know, if there's a sort of almost like a South African version of this. Maybe there is like behind closed doors, you know, with like the Stellenbosch Mafia or something. I don't know. Maybe they've got like
I was about to say,
like
I think those doors are in Stellenbosch.
Yeah, maybe they've got like a monthly like hat that goes around and like, hey, Oaks, we found this oak who like is from Mossel Bay, and you know, I think his name's Louis, you know, and yeah, it probably does happen. But what I like about this one is that if you've only got like 5,000 rand or 10,000 rand, you can get involved. You know, they've fractionalized it's a little bit. JDV, with that concludes my investing 101 in the game of golf. Guys, please, I'm sure that I've missed out on numerous golf companies and that, so feel free to call us out on whatever we've missed out on, and whatever business lingo or language we've probably got wrong. You're welcome to call us out on that. But yeah, I really enjoyed doing the research into this, and we'll probably touch base on some of these businesses maybe once every 6 months or something. And yeah, it's a super interesting space. Definitely growing. That like the global game is growing. You know, in terms of the amount of people entering it. So there's no doubt that there's some interesting investment opportunities. For me, I really like the tech side, and then yeah, this player sort of investment side is kind of a fun little twist as well. If you don't mind probably burning, I think you got to be willing. It's got to be almost like casino money, you know. You got to be willing to kind of burn it for if you can invest it in a player, because you can imagine the stress of watching a guy like trying to make a cut, you know. Like imagine how stressed that guy is. Imagine how stressed you would be, you know, if you put like your life savings on the oak. So yeah, probably wouldn't advise
Terence,
do that.
Just maybe for part 2, I mean, bearing in mind what Phil Mickelson said on when he flamed the PGA Tour on his way out, is NFTs. They seem to have gone very quiet. You know, is there some business in buying those sort of golf NFTs or have NFTs generally just, you know, hit the brakes? I don't know. I thought that was a bit of a fad to begin with, the Tamagotchis of our age. Like. So that was the one sort of golf aspects that I was thinking, you know. I mean, the other one was tours. You know, can you somehow find a way to buy a share in a tour, or is that also all privately owned? Well, I suppose you buy a share in the company that sponsors that tour.
Yeah, again, I didn't find much on that front. Seems like it, yeah, mostly privately run. I think what's going to be interesting is when these, with all tech, you know, like with golf, with TrackMan, you know, like TrackMan was what, $100,000, you know, when they first came out, and there were only like 10 of them. But you know, now you get one for like $5,000, which is the size of your laptop, sort of thing. That tech price is just going to come down and down, and I think the sort of home golf industry is going to probably boom a little bit. So that's, yeah, I think that tech, that side of it is the part that like kind of fascinates me. But listen, guys, if you if you've got a really cool golf business thing that we've missed, or you want us to maybe feature in the episode that we do next time on investing in
Part
golf
2.
101, part 2, then drop us an email at thegoat.trackza@gmail.com, or just DM us on Instagram, and yeah, we'll look into it. With that, JDV, I congratulate you on surviving the fridge. I can't see you anymore. You've disappeared.
Sorry, I did turn off because I was freezing fucking cold, and I'm still like that. The bandwidth is low here.
Well, it's a good thing you've got those earmuffs on. Those beautiful winter earmuffs that you're using. I feel
like I look like that person from the Gorillaz. You know that the band Gorillaz.
Yeah, I know exactly what you're talking about. Yeah, I think a beanie wouldn't have been out of place. I think that mustard Goat Track beanie, which is in production, would be the perfect addition to that studio that you're in.
Well, talking about the hats that we're getting, I hope that Peaky Blinders hat that I have is on the cut version. I know we had like about 20 different hats we wanted to make, and then you said no, we're only going to get 5 of these. Talking about investing in golf, I hope my mustard Peaky Blinder hat makes the cut.
I thought you wanted the black one. I was going to order the black one. Okay.
The black one.
No, don't worry. I would never do that to you. I would never rob a man of his dreams. So yeah, that's is locked and loaded. There's a guy I was watching today on the DP World Tour called Harry Hall. Have you seen him? English guy.
Yeah.
So after this, you can Google Harry Hall. Maybe he's going to be your new hero, because he rocks one of those hats hard.
Nice.
Different color every day. JDV, this was lekker, man. Enjoy the rest of your time, and we'll catch up next week. Thanks, everyone.
Shot to you.